All right, starting with the big development from India this morning, India's Finance Minister Nirmala Sitharaman has unveiled sweeping tax cuts under the goods and services tax to boost consumption.
The GST Council has slashed rates on more than 100 consumer items ranging from soaps, shampoos, small cars, air conditioners and televisions, your everyday use items. And the rate cuts will be implemented from the 22nd of September.
Common man items such as hair oil, toilet soap, soap bars, shampoos, toothbrushes, toothpaste, bicycles, tableware, kitchenware and other household articles have all come to 5. फिर रिडक्शन फ्रॉम 28 to 18%. इसमें मिडिल क्लास के एस्पिरेशंस मीट करने वाले बहुत सारे चीज़ हैं. एयर कंडीशनिंग मशीन्स, TVs which are over 32 inches, all TVs now at 18%. I want to underline, all TVs are now at 18%. Dishwashing machines, small cars, motorcycles equal to or less than 350 cc are all now coming to 18.
The GST structure has also been rationalized from 4 slabs to just 2, 5 and 18% that is. This addressing long-standing criticism that India's indirect tax system was overly complex. Federal and state governments are estimated to lose around 48,000 crore rupees or $5.5 billion.
We would not call it as a revenue loss because that doesn't seem to be the correct terminology. But net revenue implication of this proposal is expected, we have estimated it to be around 48,000 crores.
Now, to balance the rate cuts, super luxury and sin goods such as high-end cars above 1500 cc, diesel engines, cigarettes, carbonated drinks, pan masalas, they will now face 40% tax.
There is one special rate which is only for sin and super luxury goods. That special rate of 40% has also been proposed and it's cleared. That will apply only to pan masala, cigarettes, gutka, and other tobacco products such as chewing tobacco, products like zarda, unmanufactured tobacco and BD.
Now, these cuts align with Prime Minister Modi's call for a self-reliant India. Prime Minister Modi said the reforms will improve citizens' lives and make doing business easier for traders and small firms. All right, to discuss this further, there's lots to unpack, of course. To discuss this further, we're now being joined by Jayan Krishna from New Delhi, Senior Fellow, Center for Strategic and International Studies. Thank you so much for joining us on World DNA. Always a pleasure to have you.
A pleasure being here.
Now, let's just begin with understanding the very basic implications of this. What does this mean for the common man and how is this money going to be routed into the economy?
See, fundamentally, if you look at, there were 4 slabs which have been rolled into 2 now. And, a lot of goods for the common man, daily essentials, healthcare, education, a lot of products which are used by farmers, those have been reduced. I mean, the slab has come down. And so is the case with a lot of automobile products, electronics, air conditioners, and so on and so forth. If you look at the common man, I mean, the products which are consumed almost on an everyday basis, like shampoos, soaps, and so on and so forth, a lot of what we often call as the FMCG goods, there the percentage has dropped from 18% to 5%. Now, this will benefit a large number of users, right? Other products like butter, ghee, cheese, salted snacks, and so on and so forth, utensils, they come down from 12% to 5%, A lot of baby-related products like diapers, nappies, milk bottles, and so on and so forth will also reduce from 12% to 5%. I think the biggest announcement to my mind, which will affect the economy positively more than the consumption going up by the common man, are the healthcare products. So especially the health and life insurance premium, which we used to attract 18% GST, will now not attract any GST. So this would what would it result into? That a lot of people who are not covered by individual healthcare or individual life insurance policies would now be tempted, because those would become cheaper by about 18%. A lot of other healthcare products like thermometers, oxygen cylinders, diagnostic kits, spectacles for sight correction, and almost 33 life-saving drugs, some of the cancer treatment drugs. The life-saving drugs and cancer treatment drugs are, from 18% or 12%, they're becoming 0%. And, these oxygen and diagnostic kits, these have been reduced from 12% to 5%. So I think there's a lot of education, children, the kind of products they use, colors, maps, monitors, crayons, pens, pencils, the notebooks, exercise copies. Those would reduce from 12% to 5%. I think these are big announcements. And a lot of people think that farmers have not been benefited. They have been benefited. Tractors will come down from 12% to 5%. Biopesticides, drip irrigation systems, harvesting machines, and other machines used in farming come down from 12% to 5%. Cars would become cheaper. Both the petrol and diesel versions, up to 1200 cc for petrol and up to 1500 cc for diesel. Of course, there are some other limitations also in terms of length of car and so on and so forth. So these categories will come down from 28% to 18%. So straight away, people are anticipating to buy cars in Navratri and later, would get benefited. Three-wheelers, motorcycles, which are less than 350 cc, would also reduce from 28% to 18%. And the vehicles used for transportation of goods also reduce from 28% to 8%. And some of the other products. Yeah,
Mr. Krishna, let me just come in there. Now, there are, the rates are out there. And of course, we've broken that down in the report as well. We'll be carrying that too. But there are concerns that have been raised. And this is what the finance minister also mentioned, that the centre is losing more. There's that figure that the revenue secretary mentioned, estimated a 48,000 crore impact. If you can break that down further, what are those concerns and how does the centre plan to eliminate?
So this figure, what Revenue Secretary shared and the Finance Minister shared, about 48,000 crore implication of that. So this is, let us understand where does it come from. It is not coming from anticipated demand surge which will happen. This is based on the actual consumption for these more than 100 categories of products which have been, where the GST has been slashed. It is based on the 2023-24 consumption of these things, assuming that the consumption remains at the same level. Then the government would lose 48,000 crores, But that is not likely to be the case, because world over it has been seen, the moment the tax structures go down, be it, indirect taxes like these, or be it income tax or whatever it is, the consumption goes up. More and more people fall under the GST net. More and more small enterprises, who used to fear GST, and they will feel that they only have to pay 5% GST. They will come under the GST net, and there'll be buoyancy in consumption. So all that, if you take into consideration, my opinion is there'll be no net revenue implication or loss for the government. What is currently being pegged at 23-24 level at 48,000 crores.
Mr. Krishna, thanks so much for joining us. Of course, we will keep breaking this down further and further through the course of the day. We'd love to discuss this further with you going forward. That was Jayant Krishna joining us from New Delhi.